Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shanna Burt. We're live here with you today. Today is Rapid Fire Friday. If you want to get your call queued up, we're going to try to get to as many calls and questions as possible today. The phone number, 610-363-1110. That is if you're listening to the live show, which happens from 8 a.m. to 9 a.m. Central Time on so many different outlets. The best of which is our own phone app that you can download from the App Store or watch live on our website, financialissues.org. That way you can make sure that you always have us with you and you get to listen live. 610-363-1110 is the phone number to get your call queued up now. Well, at Financial Issues, we help you to stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the market and help you understand how that impacts your own personal financial issues. On Friday, I always try to give a summary of the things that have happened during the week, but man, it is hard to keep up these days. But here are a few takeaways for what has happened in the economic markets going into, February the 7th of 2025. In the housing markets, we've got a chart, if you guys want to throw that chart up there real quick. The average contract interest rate for the 30-year fixed rate mortgage with conforming loan balances is up to around 6.97%. That was for the week ending January 31st. On the chart there, you can see that we've got the 30-year mortgage rates going all the way back to 2020, and you can see they peaked out there October 27th of 2023 at 7.86%. So mortgage rates are down a little bit, but 7% doesn't seem to be getting a lot of people excited since more than 80% of people have mortgage rates 5% or less. They're not in a hurry to trade in their 3, 4, or 5% mortgage for a 7% mortgage. In addition to that, we have the average housing price in the U.S. that has gone up 33% pre-COVID. The average housing price, average home price was $386,000 pre-COVID. It spiked all the way up to $569,000 in December of 2022. It's ticked down a little bit, but still sits at $514,000, 33% higher than it was pre-COVID. So housing, we've had all of this talk this week, especially kicking off the week about tariffs, and housing could negatively be impacted by tariffs. How? You may ask. Well, it's not like we import houses, right? No, we build them right here in the United States. But the United States imports roughly 73% of our softwood lumber from Canada. That is lumber that is used for framing of houses. So if we got a 25% tariff on Canadian goods, it would likely put upward prices on lumber, which would in turn put more pressure on the home builders. So in an environment where we have higher lumber costs, we can expect home builders to not build as many houses as they would until they're sure that those houses will sell. So home builders are already stretched because they're buying down these high mortgage rates with money that they have in their companies to entice people to purchase the homes that they're building. So I don't personally think that the Canadian tariffs will be necessary because I think that the Canadians are going to do what they need to do to keep access to the greatest consumer base in the world, which is the U.S. people. The big news this week has been jobs. All eyes have been on the labor market this week as we've had key reports coming out. Just this morning, the weekly initial jobless reports came out. Came out a little bit higher than what was expected. 208,000 new weekly claims were expected. We got 219,000. The 4-week moving average, which tends to smooth out the volatile 10,000 from 213,000. This is a 5-week high, but still remains historically low. Continuing claims is the number to watch. So it comes in at 1.886 million from 1.85 million in the week before, and it holds near its highest levels since November of 2021. ADP reported this week as well. ADP is a company that does private payrolls for a very, very large number of U.S. employers, and they said that 183,000 private sector jobs were created in January. Now, that was above the estimate of 150,000, and their December number was revised up by a notable 54,000 to 176,000. And helping, and this is good news, was a rebound in the pace of hirings from small businesses after a string of sluggish hiring. Now, the small business sector and the individual consumer has been the one to suffer the most from all of the interest rate increases that we saw in 2022. Now, ADP also said that through the summer and fall of last year, government jobs were what propped up the non-farm payroll numbers. But toward the end of the year, we saw businesses in the private sector start to go higher in anticipation of the pro-business, pro-growth, anti-regulatory environment that would be returning under the returning Trump administration. So this is good news for small businesses who have really taken it on the chin under the policies of the Biden administration. Non-farm payrolls was the big number. The January jobs report, which was released just moments ago, showed that fewer jobs than expected were added, but the unemployment rate went down and the labor participation rate went up. So the first point, negative, the second two, positive. January non-farm payroll report said that January non-farm payrolls came in at 143,000 higher versus the 168,000 that were expected, and the 307,000 prior, much lower than the 370,000 last month that was actually revised up. It was initially reported at 256. It was revised upward, which is a little bit unusual, to 307,000. The unemployment rate ticked down from 4.1% to 4%. Economists were expecting it to remain the same at 4.1%. Average hourly earnings came in hotter than expected, up 0.5 of a point month over month, versus the consensus. Economists were expecting to see that number come in about 0.3 of a point higher. The labor force participation rate ticked up 0.1 of a point to 62.6% versus 62.5% last month. It's always good to see more people coming into the workforce, because we need that, or we need much greater productivity than what we have in the labor force in the workforce in order to see that 3% GDP growth that we're hoping to get. Revisions, that's something that I've talked about quite a bit on this program. The January report made a significant revision to the 2024 total. Now, a preliminary adjustment that was announced back in August of last year indicated that we might see 818,000 fewer jobs reported and actually created in the last year than were reported, but that revision came in by 589,000. So that's a little bit better, but still over 500,000 jobs that were reported to have been created that were indeed not created. For now, the official jobs numbers are still holding strong enough to substantiate no interest rate cut by the Fed through about June. Going into the non-farm payroll report, the odds for a March interest rate cut were about 16%, meaning that hardly any economist thought that we would see one. After the non-farm payroll reports this morning, those odds shrink to a 10% chance of a rate cut in March. So the market and most economists not expecting the Fed to cut rates anymore, even if they do, at least not until June of this year. Now, President Trump has been given a mandate to shrink the size and spend of government, and the Department of Government Efficiency is off to a great start in reducing waste, fraud, and abuse in the government. Trump has ordered federal workers back to the office and offered tongue-tied this morning, an 8-month severance package for those not willing to comply. The Trump administration had aimed for a higher acceptance rate, targeting 5 to 10% reduction in federal workforce, hoping to unburden the U.S. taxpayer of 100 to 200,000 lazy employees. So far, only 60,000 workers have indicated their acceptance of the severance offer. We've got more to talk about when we get back, but stay tuned. We'll be back with more financial issues right after this break.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
In a time when children are facing unprecedented challenges, the gospel stands as the greatest source of hope. At Crossroads Kids Club, we have the incredible opportunity to bring the message of Jesus into public schools nationwide. Join us in sharing the life-changing hope of the gospel with the next generation. The need is urgent, but God's love is powerful. Together, we can offer Christ's love to children who are longing for it. To join us, visit reachourschools.com. That's reachourschools.com.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shanna are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. It's Rapid Fire Friday, and our phone lines are open. We hope that you have some questions that you want to get answered, maybe about biblically responsible investing, maybe about some of the things that are happening in the market, in the economy. Maybe you just want to weigh in about your experience being a partner of Financial Issues. So if you want to do any of that, 610-363-1110 is the phone number to call. You will be the first caller in our queue. So let's continue my takeaways. There's been a lot happening this week. I'll continue what I was talking about before the break. I mentioned that President Trump had been given a mandate by the American people to shrink the size of government, to clean up fraud, waste, and abuse in the government, and return the country to we, the people, instead of the unelected bureaucrats that have been wasting our money and making decisions that impact you and I every day. So President Trump has offered a severance package to try to reduce the size of the federal workforce. He was hoping to get 5 to 10% of the workforce to accept this severance package that said that they would be able to get paid until October of this year and didn't have to do anything. All they had to do was, if they want to keep working, just go out, maybe into the private market and use all of the great governments that you try to apply that in the private market. So all you have to do is whatever you want to do, basically, and keep drawing a paycheck. But in the long run, this will save the American taxpayers a lot of money. We will be unburdened by a good bit of the money that we were paying out for some of the federal bureaucracy. So far, we've learned that about 60,000 workers have accepted the severance offer to resign. That's only about 2.5% of the 2.3 million federal workforce. Trump plans to keep only about 300 of the 10,000 USAID workers after the recent revelation of massive fraud, waste, and abuse uncovered by DOJ. The White House has also sought to identify workers that were hired within the last 2 years who lack full civil service protections and would be easier to fire. This has sort of hit a bump in the road today as a ruling by the U.S. District Judge George O'Toole in Boston pushes back at a midnight deadline set by the Trump administration. So he has put a temporary hold on this severance package. So if we can see a workforce efficiency movement like what happened at Twitter when Musk purchased it and renamed it X, we would be well on our way toward righting some of the serious wrongs that have been perpetuated on U.S. taxpayers for decades. But be ready for some temporary discomfort as we do some necessary things in this country. Here's your warning. Massive government layoffs could impact government bureaucratically compiled unemployment numbers in an impactful way, and those headlines, you can bet, will be sensationalized by the left-wing media, who is being exposed for the millions or billions that have been funneled their way to be mouthpieces for government propaganda. And you can expect that propaganda against Donald Trump will continue. But the pain that we may see in the unemployment numbers is likely to only be temporary, kind of like the pain that we endure to have a problem tooth pulled that, if left in place, would likely spread infection throughout our whole entire body and possibly take us out. So where we could see this pain, the initial jobless claims could see a short-term impact as government workers are laid off. I suspect that many will file for unemployment insurance, leading to a noticeable spike in the weekly jobless claims reported by the Department of Labor. However, that impact will vary based on how many of these workers can actually qualify for benefits. Lots of unemployment benefits are controlled by the state, and they have different eligibility requirements. In other news, Scott Bessent is the new Treasury Secretary, and he wants permanent tax cuts. He said on Wednesday that the White House wants Trump's 2017 tax cuts to be extended permanently before they expire at the end of this year. That permanency will continue to make the U.S. the #1 economy in the world, is what Bessent said. His comments came in response to reports that Congress is considering only extending them for 5 or 10 years. Bessent said that failing to extending the tax cuts would result in the largest tax hike in history. So, we've got a huge budget. We're coming off of huge budget deficits, with the federal government spending somewhere in the neighborhood of $7 trillion while only bringing into the coffers, to the Treasury coffers, about $5 trillion, leaving a $2 trillion budget deficit. So how can we manage tax cuts, many would say, with that kind of deficit? Well, we can manage no tax increases as long as DOJ keeps finding waste, fraud, and abuse to eliminate. It's estimated that the numbers, that the amount of waste, fraud, and abuse come to the tune of $1 billion a day of our hard-earned tax money that is being wasted. The markets had a rough start to the week when Trump announced sweeping trade tariffs over last weekend, but quickly postponed those tariffs on Mexico and Canada as they came to the negotiating table, saying that they would send troops to the northern and southern border to help stop the illegal flow of immigrants, drugs, and humans into the country. So for the week, the Dow is, since Monday, since it took a little bit of a hit on Monday, the Dow is up so far, pre-market open on this Friday, 1.43%. The S&P is up almost 2.2%. The NASDAQ up almost 2.8%. And the pre-markets this morning are indicating an open near the flat line, barely in positive territory. So looking like we'll close with a pretty decent week for the markets. Earnings season is pressing on kind of in the background. It's usually some of the news that is front and center right now, but there's so many things happening. So Ford Motor lost nearly 6% after they forecast a $5.5 billion loss in its EV and software operations this year. EV demand on the downslope for sure. Coach parent company Tapestry jumped 12.3% on annual sales and profit forecast increases, showing that the persisting disparity between high and low end consumers is real. So I kind of said that really fast, but Tapestry is the parent company for Coach and other high end apparel and accessory products. And so this just shows that companies that sell to the high income earners are still holding up pretty well, while the lower income consumer is really suffering. So now that you're in the know about the recent and upcoming financial issues happening in the markets and the economy around us, we hope that you will learn more how we can help you to integrate those issues into your own stewardship. Find out how you can become your own portfolio manager and defund darkness with our biblically responsible investment strategy as we screen out the companies who are funding the dark agenda of abortion, pornography, the LGBTQ lie, human rights violations, and so much more. And we also encourage you here at Financial Issues to fund the light. Speaking of fund the light, you hear us mention this week and next week leading up to Valentine's Day, Preborn Ministries is in the midst of their Heartbeat campaign. So Preborn Ministries fights the good fight against the darkness of abortion by equipping pregnancy centers with ultrasound machines, because what they've learned is that when a woman sees their baby on an ultrasound and hears the heartbeat, they are way more likely to choose life for that baby. Not only do they get to choose life for their baby, but they will hear the gospel message and hopefully will choose eternal life for themselves. And the father will hear the message too if he is there, and hopefully both will choose Jesus and bring their child up in the fear and admonition of the Lord. So prayerfully consider how you can help Preborn accomplish their mission to save the lives of babies and the eternal lives of the humans that would bring those babies into the world. Well, our stewardship verse today comes from Proverbs 11:4. Riches do not profit in the day of wrath, but righteousness delivers from death. After World War II, Germany's currency became so worthless that people used stacks of bills as fuel for fires or wallpaper. A loaf of bread cost 200 billion marks at its peak. In the late 2000s, Zimbabwe's currency suffered extreme hyperinflation to the tune of 89.7 sextillion%. That's an unimaginable number. In 2008, and their government issued a $100 trillion bill, which was still not enough even to buy basic goods. In that same way today, we can expect any wealth that we accumulate during this lifetime to be absolutely worthless when it comes to paying the sin debt that we owe after living a lifetime on this earth in human sinful flesh. A stack of $100 trillion bills that extends to the sky couldn't even touch the debt that we owe. That's because this world's currency is not accepted in heaven. The only thing that can pay the debt that we owe is the blood of Jesus. So we will spend eternity in one of two places. On Judgment Day, we can pile up every good thing that we've done or righteous act that we've ever done, and we will still fall short of the price of admission to an eternity in heaven. If the blood of Jesus is valuable enough to cover that sin and get us entrance into heaven where we want to live for eternity, shouldn't we be willing to give up whatever worldly wealth we have here in this world to get it? All right, folks, we're coming up to the end of the program if you're listening on an outlet that carries the short version. But for everyone else, we'll be back with more Rapid Fire Friday right after this. You can get your call queued up, 610-363-1110.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
I found out I was pregnant when I Googled places to abort. We drive there, and as soon as we get there, I open the door, and the first thing that I see is a bunch of Bible verses in the walls. They gave me a little counseling session, they gave me the pregnancy test again, and they do an ultrasound. And that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We decided with my boyfriend at the time, which is now my husband, to continue the pregnancy together. We started coming to the classes, doing our homework, getting counseling together. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Pharrell came to Crossroads as a fourth grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come on, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachourschools.com.
Welcome back to Financial Issues. I'm your host, Shanna Bird. Today's Rapid Fire Friday, and our phone lines are open, 610-363-1110. Welcome to the second half of Financial Issues and Rapid Fire Friday. So, We're trying to rapidly move through your questions today, but we need one from you. So if you want to be the first caller in the queue, 610-363-1110 is the phone number to call. So Financial Issues is a stewardship ministry, and we really try to balance bringing you the financial news and helping you to interpret and to navigate the things that are happening in the economy and the markets so that you can be a good steward in the way that you save and invest for the future. Do it in a biblically responsible way. But the most important news that we could share with you is found at our resources tab. If you want to go to financialissues.org, click on resources and do you want to know God? Because for the most part, I believe that our audience has already accepted Jesus as their Lord and Savior. But I think occasionally, we may, the unsaved person may come across our ministry. So if you want to find out what it is that motivates us to do what we do, go there, because the blood of Jesus is free to those who are eternal life is free. To those who believe and receive Jesus as their Lord and ultimate authority over their lives. The blood is free, but it's not cheap. And in fact, no amount of earthly currency is enough to buy it. So let's keep that at the forefront of our thinking as we navigate this and pursue as we navigate this world and pursue its riches. So what we spend our time and money on reveals what we value most. So let me leave you with this thought to ponder. What does my bank statement and day timer reveal about what is most important to me? Now, I guess that dates me a little bit. I don't know. Sam, what's the equivalent of a day timer today? I know most people don't keep a physical calendar.
Like a phone calendar?
Your Google calendar. Your Outlook calendar.
I'm not the most organized person, so.
But the point I'm trying to make is that what we spend our time and money on, and that's where we look. If you look at your calendar, what you're spending your time on. If you look at your, it used to be your checkbook register, but people don't do that much anymore either. But if you look at those two things, you're really going to see where your time and your money goes, and you're going to see what's important to you. So we encourage you to balance that out and keep honoring God at the forefront of everything that you do, especially your financial decision making. Well, speaking of putting God and keeping God first, President Trump yesterday addressed the nation at the National Prayer Breakfast in Washington, where he laid out plans to stop attacks on religious liberty. Trump vowed to sign an executive order making Attorney General Pam Bondi the head of a task force to eradicate anti-Christian bias. And we've got a clip for you here to watch. Watch this.
The mission of this task force will be to immediately halt all forms of anti-Christian targeting and discrimination within the federal government, including at the DOJ, which was absolutely terrible, the IRS, the FBI, terrible, and other agencies. In addition, the task force will work to fully prosecute anti-Christian violence and vandalism in our society and to move heaven and earth to defend the rights of Christians and religious believers nationwide. You've never had that before, but this is a very powerful document I'm signing. You got it now. First time you've had it. If we don't have religious liberty, then we don't have a free country. We probably don't even have a country.
Amen. One nation under God, right? That's what we profess as Americans, and we need a return to this. Trump said that he would also create a presidential commission on religious liberty that, quote, will work tirelessly to uphold this most fundamental right. Now, we believe that rights come from God. Rights do not come from the government. It is the government's job to protect our God-given rights. So I'm so grateful to see this, that President Trump is taking this seriously. And I'm all for making America great again. All right, looks like we've got a call coming in. I can't read the question there, but let's get to Bob. Bob's calling from... Oh, Bob's not ready yet. Okay, we might have to wait and get Bob after the break, but... Sam, can we take some questions from the website?
Sorry there, Shanna. I was just checking on Bob there to see if he's all right. Let's take a look at some questions that we got here today. So we got one from Victor and Tina. They say, do you advise selling or holding TE26 as the company is now splitting? We were notified that the split would result in a receipt of 1/3 of one share of one of the common stocks for each share of the other common stock we hold. Are both companies projected to be biblically and financially sound investments? That split is forecast to be completed on February 12th.
Yeah. So the news about this spinoff has been out for a while, and TE26 is on our buy list. So that means that we would recommend holding it, definitely not selling it. So as far as the biblically responsible part of that, it can take, up to 12 months for any biblically responsible violations in the company to emerge when a company splits off, because publicly traded companies have to report a lot of things that make their activities very transparent to the people who would buy the stock. Because whenever you make a decision to buy shares of stock, you become an owner of that company. Now, you don't get to make the day-to-day decisions about how that company is run. Those day-to-day decisions are done by management and the board of directors of a company, but they have a fiduciary responsibility to operate the company in a way that is going to generate success for the company so that they can return value to shareholders. So basically, you're hiring management to run a company that's going to make money for you. That's what buying stock is all about. And so the way to know if a company is engaging, is using shareholder dollars to fund any dark agendas, is to actually look at where those dollars are flowing to. So you have to be able to see some financial reports from the company over time, and then it'll become apparent whether or not that company is going to stay biblically responsible. Now, we expect TE26 to remain biblically responsible. Otherwise, we would certainly take it off of our list. And if it did violate any of our screens, then we would issue a sell alert for that.
All right, very good, Shanna. I think we have time for maybe one more question here, if possible. We have one from CJ. He says, hello, I'm interested in the military shipbuilding sector because I feel it is poised to explode with Trump's win since the U.S. military is so far behind China. Has FI looked into that? And if so, what company would you recommend?
So, it is something that we're looking into, some of them, but if we have a recommendation, we're having a little bit of trouble finding one that we really like right now. If we do have a recommendation, though, it would show up on our buy list. So if you're a part, are the best in this space. So, hopefully our military will get built back up, and we will be able to defend our great country as well. But if we do find one that we like, it will show up on the buy list. All right, folks, our phone lines are open, 610-363-1110. We have one person waiting in the call queue right now, but we're going to get to the Ag Report with Craig Halgert. He's going to come in and report what's happening in the agricultural and commodity markets. After Craig, we're going to take a short break, and then we'll be back with more financial issues.
This is Craig Halgard with your Financial Issues Ag Update for February 7th. Of course, saw some positive trade developments yesterday. Mexico announced that it was reversing its ban on U.S. GMO corn for human and animal consumption. Now, that ban had been in place and regularly challenged during the Biden administration. The U.S. still has the most competitive offers into Asia, although Ukraine and Argentina are becoming more competitive into that Asian market. At the closing bell, March corn was 2 cents higher at $4.95 and a quarter. Soybeans still have some tariff rumors making the rounds, but the main focus yesterday was the Argentinian bean crop, where that crop continues to decline. The crop rating dropped another 3 points last week, is now rated at only 17% good to excellent. As a result, March beans were 3.5 cents higher at $10.60 and a half. Wheat rallied when the 11 to 15-day forecast showed a cold blast headed to eastern Russia. This threat to Russian winter wheat production had the funds covering as they bought in roughly 10,000 contracts during yesterday's session. Minneapolis March wheat was a dime higher at 628.5. Kansas City advanced by 15 3/4 cents to close at 607.5, and Chicago was 15.5 cents higher at 587 3/4. Cotton futures were just a single point lower yesterday, with March futures closing out today at 66.03. Livestock futures had a mixed performance. April live cattle were $4.52.5 lower at $196.77.5 per hundredweight. March feeder cattle dropped by $5.42.5 as they closed out today at $265.30 per hundred. Now, research would show that seasonally cattle tend to top out during the second week of February and decline into the first week of June, so we could be seeing the highs for the year. April lean hog futures rose by 20 cents as they ended the day at $91.75 per hundredweight. Class 3 milk futures were slightly better. At the closing bell, March was up 6 points at 20.06. This has been Craig Howgard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support Preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done and with your generosity.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. We've got a couple of callers waiting in the call queue, so we're going to jump right over to Bob first. Bob's calling from Ohio. Hi, Bob. You're live on Financial Issues. Do we have Bob?
Good morning.
There he is.
Hi, Shana. Happy Friday and good morning.
Happy Friday to you, Bob.
So, I wanted to stick close to our asset allocation model. I'm 55, by the way, and I don't know a lot still about the market and investing, but I've been learning a lot over the years from your ministry. I appreciate that.
Great.
But our goal is to add $1,500 to $2,000 per month to our portfolio. Should we be diligent to keep doing this even, as the market's overvalued every month, adding to the positions that in the sectors that are underweighted?
Yeah, I think so. So what you're doing is a practice called dollar cost averaging. So you're putting very the same or similar amounts of money in at regular intervals, this is going to help buffer the volatility of the market. So is the market overvalued? There are lots of people that would say yes, it is. There are other people that would say, well, maybe it is, but there's still $6 trillion sitting in money market funds that are looking for a place to go, and there's still companies have been doing buybacks of their shares. The IPO market has been non-existent. So in my mind, that's one good justification for why valuations are as high as they are. But even though the market, I guess it's arguable that the market could be overvalued from a historical perspective right now, we don't buy the market because we want to be biblically responsible, and we can't just buy everything that's included, say, in an S&P index fund, because there are companies in there that we don't want any part of because they're using shareholder dollars to fund an ungodly agenda. So our focus is on building a portfolio out of individual stocks. And if you go and look at, there are some, especially in the technology sector, there are companies that do have what many would consider high valuations, but you can find a lot of great value stocks on our buy list as well. So, I wouldn't say that, even if you fully believe that the market is overvalued, I don't think that's a reason to stop investing.
Okay, great. That's awesome. Just one more thing real quick, and I know it'll be fast. So should I be buying, keeping up to 5 or 6 positions in each sector, and then once I have those in place, just keep adding to those over the duration of the long haul, unless there's a sell alert for one of those positions?
I wouldn't say that there's an arbitrary to look at the allocation. So if you have a sector that only has a 2% weighting, maybe you want to have just one stock there. Maybe you just want to have the best one for your portfolio. On the other hand, if you have a sector that has a 10% weighting, five companies would probably be a good goal. So it really depends on the amount of the sector. Taking less than a 1% position in a company makes it really not meaningfully able to contribute to the overall performance of your portfolio. So, trying to split up a 2% weighting between 5, even 4 stocks gives you only a 0.5% in each one, which is not really meaningful.
Hey, great. Thank you.
Thanks, Bob. Great questions. All right, let's go over to Jody. Jody's calling from Tennessee. Hi, Jody. You're live on Financial Issues.
Good morning. Hey, Shanna, my question, two really, but one is I've been a member for a year, and I have yet to invest any money anywhere. I'm just trying to learn all this stuff. I really don't understand most of it. I've gone back and listened to some of the things that Dan talked about, and yesterday, finally, I got around to opening an account with Fidelity. I know I've heard y'all talk about places to do your trading, and is that a good place to start? Is that a good place to invest from?
If you like the brokerage platform, I'm in private practice. The platform that we use is a Fidelity platform, and I like it. So I'm not familiar with a lot of the the retail discount brokerage accounts. But if the platform's easy to use, if the transaction costs are low, I think it's probably fine. Okay.
And I'm a fireman. When I retire, I've got a 457 that's, got about $260,000 in it. And my understanding is that through the insurance company that has it, that there's not a lot of options to invest. And I was thinking about rolling that into an IRA when I retire. Will I be able to invest will I be able to do that with the platform that I'm using? Is that a good idea?
Sure, you should be able to. So what a 457 is it's an employer-sponsored plan. So just like a 401k in the private markets, a company sponsors a retirement plan, allows you to put some money in. They may put a match in. So the 457 is the government's version, sort of the 401k plan. And whenever you retire, whether you retire from the government or you retire from a private company, you most always have the option of rolling that money into an IRA. So an IRA is an individual retirement account. So it allows you to keep the preferential tax treatment that you had in your employer-sponsored plan, whether it was a 457 or 401k. You get to, in a traditional, you get to put money in on a pre-tax basis, which means that you don't pay taxes on the money that you're putting into the account. It gets invested. You're not paying taxes on the gains and the earnings that you get while it's in that account. So then when you leave employment, you get to roll it over into an individual account that you then get to manage and take control of. So if the IRA is on the Fidelity platform, then you have, even though you don't have a lot of options in your 457 plan for investment because, your employer, which is the government, or in the case of a 401k, a private company chooses which options they put on the menu for their plan. When you're in an individual account, then, especially when it's self-directed, as long as you haven't, hopefully you didn't open it on the Fidelity mutual fund side of it, because then you may only have the Fidelity mutual funds, but on the brokerage side of it, you should be able to invest in just about anything, especially the things that are on our buy list.
Okay, well, that was what I was wondering. I didn't know if I'd be able to do that or not.
You should be able to. Yep. And, you can always check with your plan and just ask them if they have an in-service withdrawal option is what it's called. So what an in-service withdrawal is when your plan allows you, once you reach a certain age, sometimes it's 50, more than likely it's 55, sometimes it's even 59 and a half, but they would allow you while you're working to roll money out of your plan into an individual IRA where you then have the ability to control what you invest in, but still continue to participate in the plan. So still get the benefit of deferring some of your compensation into that plan and getting the employer match as well. And the way to do that would be just to call the phone number on your statements that you get from your 457 and just ask them the question, is an in-service withdrawal an option for me, and what are the ramifications, or what are the qualifications?
Perfect. I will do that. Thank you so much. I appreciate your time.
All right, Jody. We appreciate that. Was a great question, and we appreciate your partnership as well. All right. We don't have much time left. Sam, could we maybe get one question in here? I don't hear anything.
Sorry about that. Trying to multitask a little bit here, but we'll see. We got time for one more question. Let's do Eugene. He's 65. He says, is D-Wave Quantum or QBTS biblically responsible? It checks clean on Evaluator. I see it's not on the broad list. Additionally, is this stock being considered for BRI? And are you looking at other companies that might be on the forefront of AI and quantum computing? Thank you for all you do.
Sure. Yep. If you're a partner, you're going to see lots of AI stocks on our list and lots of stocks that are impacted by AI in the utility sector. It seems like most companies are going to be touched by AI in some way. So yes, to answer your question, we are looking at some of those. As for that particular stock, we did run it through our stock screener, and it does screen clean, but that's about where it stops for us. Quantum computing is a theme on our radar. It's something that we do look at in our investment committee meetings, but we don't really like this stock. It's too volatile for our likings. There's probably more downside risk than what we're comfortable with. It doesn't check all the boxes for us. In addition, Jensen, which is the CEO of NVIDIA, says that quantum is still about 8 years out. So, it's just like when the internet happened. I don't know if you remember the boom, the .com boom and bust that came up. There were all of these companies that came out that were going to make it big that didn't really have real things like earnings and sales. And there were some clear leaders that emerged, but lots of them went bankrupt. So thanks for the question, Eugene. Great job. All right, folks, we're at the end of the program today. So, Lord willing, we're going to be here again on Monday to remind you Time's getting short. The Master is coming back. At Financial Issues, we want to be here to help you with your stewardship decisions and be found a good and faithful steward when the Lord asks you to give an account for the time, talent, and treasure that you manage. Have a great weekend and tune in again next week for more Financial Issues. I'm your host, Shanna Burt. Find out more about our ministry, financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.